Hey everyone, welcome back to Corporate Decoder, the place where we decode the juicy secrets hidden in corporate filings. Today we're digging into Accession, and let me tell you, it's a report with some interesting moves behind the scenes, like a really expensive office furniture deal that's being cancelled. First off, Accession is a company that makes electric vehicles and other related tech. They're based in the US and are fairly new to the public market scene. Think of them as a player in the growing electric truck and commercial vehicle space. Scroll item 12L tear, termination of a material definitive agreement. Scroll Q, ASOS has decided to terminate a pretty significant lease agreement for a huge manufacturing facility in Mesa, Arizona. This place is massive, over 2033. This isn't a small decision, it's a big lease, and ending it comes with a price tag and some conditions. The deal they'd struck to end this lease, called the Lease Termination Agreement, basically means OS will be making payments totaling about $2.7 million over the next 18 months after the lease officially ends. That's a significant chunk of change just to get out of a lease. On top of that, they're letting the landlord keep their security deposit, which is valued at around $1.2 million. So if you add it all up, the cost to get out of this lease is approaching $5 million. That's the kind of money that makes you pay attention. And now Fair also agreed to pay leasing commissions, which are fees paid to real estate agents or brokers when a new lease is signed, totaling about $1.3 million. So if you add it all up, the cost to get out of this lease is approaching $5 million. That's the kind of money that makes you pay attention. Now, this whole termination is contingent on a key factor: the landlord finding a new tenant to take over the space. If they don't find someone else to lease the facility, the original lease with Oz will just continue as if nothing happened all the way until 2033. So it's a bit of a gamble, or at least a strong indicator of confidence from the landlord. It's also important to know that Sorex actually inherited this lease when they acquired another company called Electromechanica Vehicles Corp back in March of 2024. So this isn't a lease they signed themselves originally, but one they've now decided to exit. The company EXO is reassuring everyone that this move won't affect how they do business. They'll still be using their other manufacturing sites. This is a good sign, meaning they've likely planned their production and operations around this change. It seems like they're streamlining their footprint rather than facing production issues. Scroll item 13, E2TT, scroll XEL. Moving on to another key piece of information in this filing. EXO has also issued some unregistered shares of their common stock. This sounds a bit technical, but it's essentially a way for the company to issue shares without going through the full public registration process, often when dealing with private debt or specific agreements. This involves a deal with a company called Algemeyer Automotive Company. It goes back to August 2022 with a note purchase agreement, which is basically an agreement to buy notes, a form of debt. It looks like an existing convertible promissory note, which can be turned into shares of stock, was amended on August 8th of this year. The really interesting part here is how accrued interest on this note is being handled. We're talking about $6 million in interest that accumulated up to August 11th. Instead of paying this in cash, ASOS has agreed to convert it into shares of the company's common stock. The price for these shares is based on the volume-weighted average price over a 10-day period ending on August 25th. This is a common way to handle interest payments in these types of agreements, especially when cash might be tight or when the company wants to preserve cash for operations. And what actually happened was that on August 25th, SOS issued over 1.8 million shares of their stock to Algemeyer to cover this accrued interest. This is a direct conversion of debt into equity. It increases the number of shares outstanding, which can dilute the value of existing shares if the company's market value doesn't increase proportionally. They're issuing these shares under specific exemptions from the usual registration process. This usually means the transaction is considered to be with sophisticated investors or involves an exchange of debt for equity, making it less risky in the eyes of regulators. Scroll item 9901. LSEF financial statements and exhibits. Scroll Q finally, let's look at the exhibits. These are the actual documents supporting the information in the report. Scroll N10E Lease Amendment Termination Agreement between Landing for Industrial LLC and EMV Automotive USA Inc. dated August 21, 2025. Scroll Agreement detailing the termination of that large lease we talked about earlier. This is where all the specifics of the termination, the payments, and the landlord's responsibilities are laid out. Scroll N22's note purchase agreement, dated as of August 9, 2022. by and among Exos Inc. and Algemai Automotive Co-After Incorporate on Form 8K, filed August 11, 2020 scroll. Report on Form 8K, filed August 11, 2020 scroll. Catch-cherry on how this debt arrangement started. Scroll 1033, Amendment Number 1 to Note Purchase Agreement. Dated as of August 8, 2025. By and among X Inc. and Algemai Automotive Co. Alden Incorporated by reference to Exhibit 10.4 of the company's quarterly report on Form 10Q filed August 13, 2025 and Scroll Cans Exhibit 10 Amendment Number 1 to Note Purchase Agreement dated Amendment Number 1 to Scroll the report on Form 10Q filed August 13, 2025. Scroll Exhibit 10.3 is the first amendment to that agreement showing how terms were changed, specifically on August 8th. Scroll 10.4 second amended and restated. Convertible promissory note dated as of August 8, 2025 by and among ZAS Inc. and Algemai Automotive Co. Incorporated by reference to Exhibit 10.5 of the company's quarterly report on Form 10Q filed August 13, 2025. Alt Scroll Alc 710 filed of the company's quarterly report on Form 10Q filed August 13, 2025, Odd Scroll XCF 2020-25, Odd and among Onks Os Inc. and Algemai Automotive Koptigadai, reference to Exhibit 10.5 of the company's quarterly report on Form Suri Note itself, again dated August 8th. This is the document that outlines the terms for converting debt into stock. Scroll 552 letter agreement from August 14th, letter agreement from August 14th, 2025, OMER incorporated by reference to Exhibit 10.1 of the company's current report on Form 8K, filed August 14, 2025. So scroll Guff Exhibit 10.5 is a letter agreement from August 14th, likely clarifying or confirming details of the previous agreements. Scrolls nature to dated August 27, 2025, EOS Iana Pogoshai Ioyan Ia Pogoshan, the Iana Pogoshan Ioela Pogoshan, the Chief Financial Officer, on August 27, 2025. This confirms the filing is official. Now looking at this filing, Exos Inc. is making some significant financial moves. Terminating a lease of that magnitude, even with the associated costs, suggests they are either overextending themselves with facilities or are strategically cutting costs to focus on core operations. The nearly $5 million in exit costs is substantial. It's like deciding to break a big gym contract. You still have to pay for a few months, but you're getting out of a commitment you don't need. The conversion of $6 million in interest into stock is also a big deal. It shows they might be conserving cash, which isn't always a bad thing for a growing company. But it also means existing shareholders now own a smaller piece of the company. For every 100 shares they owned before, they now own slightly fewer. This dilution can impact share price if the market doesn't perceive the value of the new shares as equal to the cash saved. We need to see how the market reacts to this. The company is banking on its other manufacturing facilities being sufficient and its operations remaining unaffected. This is a positive outlook, but it's always a risk when you shed significant operational space. The fact that they assumed this lease through an acquisition highlights the integration challenges companies can face. Overall, XO seems to be in a period of restructuring its physical and financial commitments. The direction is towards cost savings and possibly consolidating operations. The main risk is executing these changes without disrupting growth and managing the dilution from the stock issuance. The opportunity lies in using the freed up capital from the lease termination and the cash saved by converting interest to fuel their core business and further develop their electric vehicle technology. The strategy seems sound if they can manage the execution well and the market accepts the share dilution. It's a balancing act for sure. What's your take on these moves by Exos? Are they smart cost saving strategies or signs of underlying financial strain? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more in-depth analyses. Don't forget to join our Discord community. The link is in the description for even more discussions. Thanks for watching and we'll see you in the next one.